Well, the Bank of Canada held its key interest rate at 2.75%. With more on today's announcement, I want to bring in financial planner Alan Small. Always great to chat with you on interest rate day.
Good to see you.
Was this? I know that there was some economists were kind of weighing whether or not, because of the trade war, maybe that we would ease off and maybe have a rate reduction. Not the case. Why do you think Why do you think they held steady?
Yeah, well, I think there's a lot of uncertainty, right? I think we still don't know how the tariffs are going to affect things. We're starting to see some effects, but the economic data still hasn't caught up yet, right? The reciprocal tariffs were put on just the beginning of the month. I know for many of us, it feels like they've been on for a while, but just April 2nd, and that didn't even affect us because reciprocal tariffs did not hit Canada. So our tariffs started to come into play in March. We still don't have a lot of data. A lot of the economic data is prior to that. And obviously, negotiations with the United States, I think those are on hold until a prime minister is elected. So I think a good time to pause for the Bank of Canada. It was about a 50-50, a flip of the coin. And I guess the Bank of Canada chose to sort of hold for now just to see how things work out.
I know that there's obviously a lot of concerns, especially in the housing market, with a lot of mortgages up for renewal, and what that's going to mean for people who could potentially see their rates double if they took advantage of those historically low rates about 4 years ago. How do you expect today's interest rate decision to impact those people? And do you think it might, now that they've kind of held steady and maybe people have an idea of the future of what their mortgage might look like, how do you think this is going to impact housing?
Yeah, I think interest rates will come down this year further. I just think this is a pause. If you think about how many meetings the Bank of Canada has, how many interest rate setting meetings they'll have, they're not going to cut at every meeting. And it just made sense for them to pause now with a lot of uncertainty. For those that are renewing their mortgage or looking to buy a home and take a mortgage out, obviously, interest rates are a lot lower than they were just a year ago. They will go lower, but I don't think they're going to move as quickly as they have been moving. I think the Bank of Canada has already indicated that they're going to take more of a measured approach. So those that are renewing their mortgage, yes, a lot better than if you renewed it last year. But, I think depending on what time of the year, if it's now, if it's in the fall, I think you could see a few rate cuts before the fall. But I just don't think the Bank of Canada is going to move that quickly because they are expecting inflation to start to tick higher because of tariffs.
And he even mentioned, Tiff Macklem mentioned the R word, recession, in his update today, possibly in 2026. And when you're looking in the long term, especially for the average investor out there, what's your take? What's your advice?
Yeah, it is quite possible. And a lot of people are predicting as a base case that the U.S. may fall into a mild recession. If that were to happen, I know Tiff Macklem has said that it would be very difficult for us not to fall into a recession as well, since they are a major trading partner. So it is quite possible. I don't want people to be afraid of the R word. I think that, possibly we could be in a mild recession now. And usually, by the time we figure out that we are or have been in a recession, which is 2 negative quarters of growth or GDP growth, we're probably already out of it. So I don't want people to fear the word recession as much as they do. I think things are going to get better over time. I think interest rates will come down. That will help people, will help stimulate growth. But we just need to figure this out. We need to figure out how to go forward. We just got to be a little less dependent on the U.S., perhaps open up some trading lines with other parts of the world. I think in the end, this is going to help Canada. It's going to help our economy. It's just going to be a bumpy road to get there.
Alan Small, I always appreciate your time. Thanks for coming in.
Thank you.